Hi class, I'm happy to be with you here today, and we are going to do a big bank reconciliation, and this is Chapter 8, Problem 4. Now, what I like to do is I like to set it up per bank, per book. Book meaning our accounting records, okay? So first I'm just going to set this up. Okay, so here's what happens. What happens is you get your bank statement and it's got a certain amount of cash at the bottom. And you know this just from your own personal banking. What the bank says you have is pretty close, because now that we're all doing online banking, when you go to the bank and you make a deposit, it immediately shows when you look online, okay? But think about a business. Think about a business that is still taking big deposits to the bank every afternoon and is writing checks and mailing them. Then the person they wrote a check to is opening that check, creating a deposit, taking it to the bank. Then their bank corresponds with your bank, and 2 or 3 days later the money goes out of your bank account. So when you get a bank statement, a business bank statement, the amount of cash it says it has is not what you really have, because only you know the deposits that you took after that bank statement was mailed out, or actually just perhaps processed and printed. And you also know about checks that you have written and mailed to people that the bank doesn't know about yet. So you've got outstanding checks and you've got outstanding deposits. So like, let's say the last day of the month, you made a big deposit, and you own the business and you stopped by the bank on your way home and made this deposit. Well, that doesn't get processed. I mean, it's not going to show up on they may have already cut off earlier in the day to send you a bank statement. So that that deposit that you made, for example, Monday on February 29th, it may not show until your March bank statement. So those are deposits in transit, outstanding deposits. You hear different terminology. We have to learn to be flexible so that we can roll with what any business is used to calling things. Okay, so let's do problem 4. It's one of the more complex bank reconciliations that's in your chapter. And I'm going to have to look down, because I've got to look down at the problem and then look up, so it's going to be a little goofy, but anyway. Okay, so the following information is available for Sedona as of May 31st. Okay, cash on the books amounted to $42,755.16. Okay, balance. Our general ledger says that we have $42,754.16. Okay, and then the bank statement came and it says we have $52,351.46. Okay. And this is all at May 31. We think we've got this much at May 31. The bank thinks we have this much at May 31. Okay, so here's some things we know. A deposit of $52,20.94 representing cash receipts as of May 31st did not appear on the bank statement. Okay, you already debited cash and credited sales or whatever it was. Okay, so it's in your books, but the bank doesn't know it yet. So that is an outstanding deposit that we're going to add. Add outstanding deposits. Okay, $52,20.94. Okay, outstanding checks totaled $39,36.80. Well, how did you know this? Well, because you went through the bank statement, and every check that cleared the bank, you checked it off in your general ledger. Okay, you check, or your QuickBooks software or your accounting software package has a reconciliation function, and it brings up all the checks that you've written and you go through and mark them as paid. Okay, so you can see what's left that doesn't get checked off are ones that you've already written and mailed that have not hit the bank yet. Okay, so we need to subtract outstanding checks. So I'm emphasizing what we're adding and what we're subtracting here. And it was $39.36.80. Okay, then a check for $19.20, in other words, a check that we wrote for $19.20, returned with the statement, was recorded incorrectly in the check register as $13.80. Okay, so what happened is we really wrote the check for $19.20, and that's what the bank cleared it as, but somebody recorded it in the accounting system as $13.80. Okay, so we've only subtracted $13.80 when we wrote the check, and they subtracted $19.20, apparently correctly, in the bank. So whatever the difference is between $19.20 and $13.80, $540. So we need to subtract $540 from the books. So we will subtract check incorrectly recorded. Now I will tell you a little hint. When you have a mistake that's evenly divisible by 9, it's probably a transposition error. Often it is. Okay. The bank service charge for May amounted to $25. Okay, well, you knew this because you opened the statement and saw that they subtracted $25 from your account. You didn't know how much they were going to subtract this month until you got the bank statement, so we need to subtract it from the books, okay? I'm going to go ahead and just extend this down so I don't get messed up. Minus bank service charge. Okay? Or we could bracket these, and that would make it really easy to make sure we know what we're subtracting and what we're adding. Okay, the bank collected $12,360 for Sedona on a note, and the face value of the note was $12,000. Okay, well, this explains a lot, because look how much more money they think we have in the bank than we thought we had. So I know this sounds crazy, but sometimes people set it up to where somebody that owes them money goes to the bank and pays them. As a matter of fact, that's called a lockbox system, and some companies actually have their customers mail checks to them to the bank, because the idea was that if they were already at the bank, people at the bank, they'd pay a fee, and people at the bank would add it all up and hurry and get it in the bank for them, and then they'd make more interest that day because the checks would be in the bank, 6 hours longer, and they'd make more interest. Doesn't make much difference in my life, but if you were getting millions of dollars in the mail every day, it would make a lot of difference. So what happened is that we didn't know it yet, but when we opened our bank statement, we can see that somebody went into the bank and paid money that they owed us. And they said that the face amount of the note was $12,000. So what is that extra $360 they paid? What is that? It's interest income, okay? Interest income. So we're going to add repayment of note. So that's a positive $12,000. And we are going to add interest income received, and that is $360. Okay, so you can see we're getting closer. We're getting closer to reconciling this thing. Okay, an NSF check for $183.56 from a customer, Eva Mendez. I'm sure that the actress Eva Mendez would not appreciate that. Was returned with the statement. Okay, so what that means is that one of your customers paid you, and you included the check with your deposit. You took it to the bank. Unbeknownst to you, that customer didn't have enough money to cover that check. And so when your bank tried to get it from her bank, it was declared insufficient. So NSF is an abbreviation for insufficient. So the bank has already taken it out of your account. First they put it in with a deposit, then they reversed it when they found out it was insufficient. So we need to get it off our books, out of our cash, and we will need to rebill and call the customer and tell them to come in and pay us. But to get this to reconcile, we need to get it off the books. So we are going to subtract an NSF check, and the amount was $183.56. Okay. Okay. Two more things. The bank mistakenly charged to the company account a check for $850 drawn by another company. Okay, so interesting. When we were going through checking off all our checks, looking at the bank statement, we see where they charged somebody else's check to us. So our books are right because we didn't write that check. We will call them and tell them about the mistake, and they will give us our money back. Okay? So we need to add $850 to what the bank thinks we have. Okay? The bank thinks that we have $850 less than we really do because they got to give us that money back because they're going to get it back from the other bank customer. So we are going to add check incorrectly charged to us. Okay? $850. All right, and one more piece of information. The bank reported that it had credited the account for $120 in interest on the average balance for May. Okay, so we can see in the bank statement that they credited us. And remember that when the bank credits our account to give us more cash. We debit our account to increase cash. Why does the bank credit us when they give us more cash? Because they owe us. See? When you take money to the bank, they debit cash and they credit your account because they owe you that money and you can come get it anytime. So see, they keep their books the same way that we do. It's just that we're the one they owe. That's why they credit us when we take a deposit. But we debit our accounting records to increase cash because all assets are increased with debits, right? Okay, so we don't know about this until we see it. So we need to increase our account for interest earned. And I really meant to wear a black sweater today so that even if I wrote across myself, you would still be able to read it, but I forgot. So sorry about that. Okay, now, if we have done a good job, these two columns are going to add up to the same, okay? So balance per bank, there's the $850 deposit. Yeah, I think that we've included everything. So if we've done this right, these columns are going to add up to the same thing. And what we end up with, let me get a check figure so I don't have to do this on the fly, $54,485.60. $54,485.60. $54,485.60. Okay? So, see? So what we've done, this is so much more powerful than just doing it on the book side, because we need to be able to make the bank statement come down to our true cash balance and our general ledger come down to our true cash balance. So our general ledger needs to be this amount. When we do our financial statements for the end of May, this is the balance in our cash account, okay? So what do we got to do? Well, we got to make journal entries. We got to make journal entries for these, not for this. This is off, we've already got these deposits recorded. We've already got these checks recorded. We didn't incorrectly do this check. We don't do anything from here, but all these, somehow, we got to get the general ledger from here to here, okay? So I am going to attempt to erase just this section right here real quick so that we can make some journal entries while we're looking at, and this is going to be a big smeary mess, but so we can make some journal entries while we're looking at our reconciliation so we won't forget anything, okay? All right, I hate to use valuable video time to do that. I just don't know what else to do. And it's weird. If I let it dry to just the perfect spot, I can just wipe it right off. It's just hard to decide when that is. If it's still too wet, it just smears around. If I let it get too dry, I'll have to re-wet it again. It's very annoying. I'll just tell you right now. Okay, we're getting close because the edges are getting to where I can get them off clean. Isn't this crazy? I wish there was an easier way to do this, but I'm not going to complain because I absolutely adore this technology. Okay, we're about there. See, if I let it dry a minute, I can get it off. I got too impatient. Okay, let's make some journal entries. Okay, so check incorrectly recorded. They said it was for a sale, okay? So I've got sales over recorded by 540, and I've got cash over recorded by 540, okay? Oh no, they said it was for, no, it wasn't for a sale, it was for a purchase. Yeah, it was for inventory. All right. It was for my purchase. Okay. Bank service charge. Okay. Well, we probably have an account that we call bank service charge. $25. Credit cash. See, I'm reducing cash for every one of these subtractions, and I'm going to increase cash for everything we got in. Okay, we just found out we got that extra 12 grand. Okay, I'm going to add that. And then what is that? Somebody owed us money and they paid us. Well, they tell us it's a note in the book. Okay, so we are going to credit note receivable. And then we're going to increase cash for the $360 extra that they paid. And that is interest income. Okay, here we are, the NSF check. Okay, so that person owed us money. They paid us. It bounced. They still owe us money. So we got to get it back on the books as accounts receivable, and then we got to call them and tell them they need to come and either bring cash or a money order or a cashier's check, because we no longer trust them to write us checks anymore, right? But for right now, we got to take it out of cash. Hopefully, we'll get it collected and we'll put it back in cash pretty soon, okay? And then the last thing, we got interest. So cash, we need to increase cash for 120 and record that in interest income. So see, we got two sources of interest income with this bank statement, okay? So that's the deal. These journal entries are how we get from where we thought we were on cash to what we need to show on our income statement, or I mean our balance sheet for the end of May, Alrighty? And the general ledger will now reflect this for the end of May. Okay? Thanks, guys.